Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Tuesday, we took a total of one trade, one winner, for a total absolute return of $1,967 or 0.83% in our 1% risk model portfolio, where we are risking no more than 1% per trade. The trade was 74.35 long calls, again for 83% return. On the session, SPX traded and closed higher to 74.28. The theme was rotation yet again. Defensives largely bid. Healthcare big winner here, up 2.36%. Cyclicals mixed, but the biggest sector, or the second largest sector by market cap, financials, positive 1.27%. That is going to support the S&P 500. And then growth mixed. So we did see selling in technology, semis down 3.5%, although off the lows, this was down about 5% in the morning. Megs, communications, discretionary, positive. So overall, a bit of a neutral, a slightly positive, and I believe for most of the session, we did have a neutral to bullish reading on our dashboard. ADD, which measures market breadth, open positive, which persisted throughout the session. A bit of a slow grind up here, trading around plus 600. Relative sector performance, we did have major underperformance here in growth. Again, that was technology and semis down, but they did lead the bottom there and actually started to outperform defensives and cyclicals on a market cap weighted basis. VIX peaked at 19.5 and contracted. That was also a supportive variable, finding some support here around 18 and just kind of base sideways for most of the afternoon. For the SPX, levels were respected. We've essentially been trading the same levels for 4 sessions now, with the macro upsloping trend line in play yet again, which more or less correlated with the previous session's low, 73.82. 7400 key level, but hasn't been respected as support or resistance. However, we've continuously seen demand present below, and that was the case here today, the case for essentially 4 sessions now. We were dip buyers kind of at or below 7400, looking for a move up into the fair value zone, 0 gamma, SPY ABS, the mean of range of 74.25. We got that reversion, broke out to the upper bound of range, which was a huge confluence zone. So we had a big gamma level in here, G7 74.50, SPY flip level 74.52, which we tested to the penny, SPX flip level 74.55, and also the max call, which is the strike with the highest 0DTE call volume. So big zone, and we saw that reversion once again back down to the fair value zone around 74.25. which was our base case. The macro trend line would hold going into the macro event today, which is FOMC. We would get a green close and we would settle around 74.25. Just textbook range trading, but today with the catalyst FOMC, we look for a directional move one way or the other. So a range break either to the upside or a range break to the downside. For today, levels and dynamics are largely unchanged. Starting on the 1-hour time frame for the SPX, the trend remains down, with the 20 EMA in green below the 40 EMA in red. However, price continues to hold the macro upsloping trend line, which connects the June lows, and of course we've tested this many times over the past week. There is also a downsloping trend line connecting the swing high off the big 75.75 resistance zone. 1 test, 2, 3. If you go to the SPY, that trend line is a little bit cleaner because we actually tested it on Monday, whereas SPX fell a little bit short. But we're nearing that apex point where those 2 lines converge. If you break out, potential target back to 75.75. If you break down, potential target to that 7,300 put wall, and perhaps down to that recent low around 72.40. That was that 5% down move. Dropping down to the 15-minute time frame, we did get a trend change in yesterday's session with the 20 EMA in green crossing above the 40 EMA in red. Now, the lower the time frame, the more sensitive it's going to be, so this could potentially lead the higher time frames, such as the 1 hour, but bulls still need to reclaim the transitional level of 74.65. That is the SPX flip. So this did shift higher 10 points day over day, where it was 2 days ago, where we had that big false break and reversal. Above that, SPY flip 74.80, the big 7500 balanced gamma strike 75.25, which is also the implied high today. 75.50, and then the major support on the upside 75.75 80 zone. As far as the downside goes, same support zone as we've been trading for the past week. We have that macro upsloping trend line 73.85 gamma, so that did shift lower from 25 day over day. Previous low 73.82. So this remains major support, but today there is a catalyst to break that macro support. So if we do break down a potential target 73.50 followed by 73.25, implied low today 73.31. Okay, so that's a 1.3% implied move. That is a 3. Followed by SPX put wall at 7,300. So, I mean, levels are unchanged. We've been trading the same levels again for a week now. And the same goes for the VIX. Volatility has been in an uptrend and active since bottoming off the 15 handle in mid-July. 17.3 recent breakout strike, 16.5 recent breakout strike. Those are two key levels that we've been talking about for several weeks. And the same thing on the upside, 20.5, the recent peak, the peak from mid-June. And then a break opens the door to the peak from early June, 22 to 23 zone. Transitioning over to our dashboard, total gamma exposure for the SPX remains negative, 110 million notional, trading below our main transitional level of 74.65. That is the volatility flip. We've been below that level for about 6 or 7 sessions now. Below, all strikes are negative. That is destabilizing for the market price. Above, all strikes are positive. That is supportive for the market price. 7,400, that macro trend line remains key. Below is where we'll start to see some material negative gamma. Conversely, above the flip level, above 7,500 is when we're going to start to see some material positive gamma. For today, we have the FOMC meeting, rate decision 2 o'clock, Fed press conference 2:30. Now, this meeting does carry a little bit more uncertainty than typical, largely due to the removal of forward guidance. So if we take a look at what the market is pricing in terms of rate expectations, 64% no change, 36% of a rate hike. If a rate hike is delivered, going to be bearish for risk assets. If no change delivered, we very well could see a bit of a rally, some vol contraction upon that release, and then the tension is going to shift toward Kevin Warsh and his press conference, where he did have a bit of a hawkish tone at the last meeting. Click the link here to read our notes. But hopefully this is the catalyst for the next directional move. I don't know about you guys, but I'm getting bored trading the same levels and, just the chop, the rotation. It would be nice for a change in dynamics.